Buckle up. I'm about to shock you with a story about a housing bubble. When you've been doing this since 2002, like I have, you've seen just about everything. In fact, 2008 was one of the craziest times that I can ever remember. Certainly for us personally and at Weber Mortgage, and just for the entire economy as a whole. So, what happened in 2008, and have we seen it happen since then? 2008, we had a housing bubble. We had a problem where housing was greatly affected. Well, what is a bubble, Michael? What does that even mean? I'm glad you asked. Housing bubble is a situation where values are inflated and they correct. Think about a bubble growing, then you touch it, pop, and it's gone. Well, we had seen an incredible situation in the housing market. We had seen unbelievable growth. We had seen builders building as fast as they could, sellers selling their houses soon after they purchased them, mortgage rates incredibly low, and most importantly, mortgages being approved for people who probably could not have afforded them. In particular, we saw loan programs designed to give mortgages to people without really even verifying their income. Some of them not even asking them their income. Literally, we called the craziest of these a ninja loan. No income, no job. That's the type of lending that was happening. Now, was it happening because lenders and mortgage people were greedy? It was happening because people wanted to purchase homes, and Wall Street wanted to make money by lending them money to purchase those homes. So a lot of things went into it. People were purchasing homes that they couldn't afford. People were getting qualified for payments that they couldn't make if anything changed. And we lived in this kind of fairy world that was self-fulfilling for a while. We saw it grow and grow. People bought homes in 2001 and they became extremely valuable by 2006, 2007. Then 2008 and 2009 came around. Well, what changed? The economy changed. As things started to struggle in the economy, people began to lose their job. People began to fall on hard times. People began to not make their payments or not be able to make their payments. We literally saw almost any scenario that you can imagine where people had refinanced to 15-year loans, which means a higher rate, but a lower rate, but a higher payment. And then their jobs changed dramatically. They were let go by their employer and they had to take almost an entry-level job just to get employed, and that entry-level job wasn't sufficient to support a 15-year mortgage. And so now they were trying to refinance from a 30-year loan to a 15-year loan, but they couldn't do it because they didn't even make enough money to support the 30-year loan. So the values of houses skyrocketed because everybody was able to buy anything they wanted, multiple houses, investment properties, all that. Then the economy shifted dramatically. People began being fearful for their ability to pay their bills. They lost their jobs. And what happens when you lose your job? Well, we don't have the money. Let's say you have a vacation home and a rental property and a primary residence. When you stop making the payments, which one are you going to stop making the payments on? Pretty good chance you're going to stop making them on the investment property first because you live in your primary and you vacation in your vacation home. But then things don't get better and now you can't afford both payments, so you stop making payments on your vacation home. Now you just have your primary residence. And if they're bad enough, maybe you can't even afford your house payment, and so you lose your home as part of the crash. That's the housing bubble. It was extremely dramatic. It's not even hyperbole to say that the housing bubble was as big of a crazy situation as COVID was a health situation. It was that dramatic. Have we seen housing bubbles since 2008? Answer is no. We haven't seen a bubble. We haven't seen a burst. We haven't seen a massive change in home value. And that's really what a housing bubble is. Fear of a housing bubble is fear that I'm going to purchase a home at an inflated cost, and then that home is all of a sudden going to be worth significantly less. So let's look at those two parts. One, the inflated cost, and two, significantly less. Well, are we in an inflated cost market? You could make an argument that we are. We've seen home values increase dramatically over the last 3 to 4 years. We saw interest rates super low in 2018, 2019, 2020, and that pushed values up. Then we got into COVID and the desire for new housing skyrocketed in 2020 and 2021, and that pushed values up even higher. Then we saw 2022 hit, interest rates changed, they went up, and all of a sudden, well, over the last 2 years, the demand for housing it's come back a little bit, but not a ton. But what we have seen is more people are paying cash for houses rather than financing them. So they skirted around that interest rate issue by just paying cash for their new home. Well, that means people are still buying houses. So we have inflated the value. But let's talk about part two, the values dropping. What causes the value of a home to drop? Well, it's just supply and demand. If you have way more supply than you have demand, values drop. If you have way more demand than you have supply, values go up. We're still in a situation where we have maybe leveled off a little bit, but the supply and the demand are either healthy or the demand still outpaces the supply. And as long as that's the case, we're not going to see a major adjustment in home values. So when I get asked the question, should I be worried about a housing bubble? We got to see those two things. We have to see values escalate. We have seen values escalate. That part of the equation exists. But are we going to see a major correction? What would it take in order to see that major correction? Well, it would take a significant impact to the economy and in particular employment. We would have to see unemployment numbers skyrocket. We would have to see businesses doing a lot less business. We would have to see them dialing back their expenses dramatically, even into personnel situations. And we're still not seeing that. Do I think there's a housing bubble coming in 2025? I certainly do not. But the last thing I'll tell you about this is, well, how is a housing bubble going to impact you? And the bottom line is, if you're not selling your home, it won't really impact you. If you don't need to sell your home because you need to move, because maybe you're being transferred out of state, then a housing bubble isn't going to affect you. Yes, on paper, your value in that house would drop and therefore your net worth would drop. But if you don't have any intention of selling that house, if you're going to live in that house for the next 10 years, then it's just a correction that we would expect to be recovered. If on the flip side, values did take a big decrease and you had to sell because you had to move, that's where a housing bubble could come into play and impact you. Still, 2025, do I think we'll see a housing bubble? No, I don't. If you got a different perspective on this, or if you have questions about it, or if you've done research or seen something online, I would love to flesh this out with you. All you got to do is pick up the phone, give me a call, or DM me housing bubble, and we'll start a dialogue so your questions can get answered.